come to the decision to go public versus staying private longer? And these days there are a lot more ways to become public, right? The whole SPAC market has sort of gone from sort of fairly obscure route to something that's very mainstream, direct listing. What has your experience been in your boardroom sort of thinking about, do we need to go public or not? And if so, what are the pros and cons of the different routes? Anyone want to kick us off with thoughts on that?
I'll go first on that. I think the key really is, what is the asset you got? And is that, I wouldn't be worried about the mechanism. I would first make sure, is this an enterprise where we think we have long-term disruptive potential, where we'll benefit from having access to capital in a way that will allow us to continue, especially if it's innovation, to continue to keep a long-term perspective. If the trade-off means we have to go public and then we have to start focusing on quarters, then it's not worth doing. But and so for us, we certainly looked at the marketplace and said, we're at the time, Beyond Meat eventually did our IPO. We were at 87 million in sales, so we knew we had a lot of runway ahead. We're dealing at a category that's $1.4 trillion. So we knew we were at the very, very beginning of that. And then there's a question about the right mechanism, and certainly I have opinions about SPACs, but it didn't even factor in. It was really more a question of, is this a company where we think we'll have a trajectory of growth and our long-term vision won't be compromised by going public? And for us, the answer was yes to both.
I would say when we did the split out at Netgear, we really felt like we had one IoT business and one networking business, a subscription business, and buy a router and buy another one in 4 years. So the thought was that there would really be, they really were different products to be run by different people. One was almost all software versus the hardware and software. And so that run by different management teams felt like each business would get more investment, and especially, having the capital to be able to potentially buy other companies or do some interesting things with the capital. So I think that was, one of the big decisions there. And then I still believe same thing, access to capital and that, but do you have a good business? And when you start small, do you have the metrics, or what are your key indicators that are going to be able to bring that street along with you on the journey as you grow? I feel like it's hard to get those defined and make sure that's what you want to go public with and what you think will do well. So I do think there's got to be a lot of thought into that, because everybody goes public with some kind of hiccup eventually, and how can you keep that to a minimum?
Obviously, I think all of you have had you've had several experiences of taking companies public. So from all of that, what is your advice based on sort of lessons learned, things that go wrong, wisdom? Like, what are the most important thing a board should be thinking about or do to be IPO ready?
Well, I'll jump in to start, but so clearly I think predictability is pretty damn important. So if you can't predict your business, don't even think about it. That's kind of the number one thing. Look, I really do believe that you want to get some good experience around the table. That can be a CFO, because a lot of times the CEOs are not experienced with doing an IPO. And look, an IPO is just another funding event. It really is not a big deal. In fact, I've done private rounds that are more complicated than public filings. But it is very helpful to have someone who understands the buy side and the sell side and the process and all of that kind of stuff. And you can do that through consultants, but a good CFO is always going to be your best solution for that. That being said, this is also what leads to the lack of diversity on management teams. So what I believe in is get some good people on your board. And I'm saying this from a biased point of view, because in theory, I think I'm a good person on the board, and this is kind of what I do. But I think if you have someone who doesn't have the experience yet has the people around them to help them through this, it's just as effective, right? But you got to get that experience around you. You don't want to screw this up, is what it really comes down to. And yeah, the bankers will help, but the bankers have their own agenda. You have to remember The banker's going to move on to the next deal. You're not the customer. The buy side's the customer. And so what you need are people that understand the process and are going to be honest with you. So I think boards, advisors, things like that are really important to get surrounding you as you're ready to go and make that leap into being a public company.
And I would say if you have ambitions to do that, it is never too soon to start preparing, because I'm watching them with, they're on Excel spreadsheet for doing some accounting and this, the lack of systems, and you don't need to have great systems, but you've got to have something and a path for that. And I do agree. I mean, on most of the boards I'm on, I am a mentor to the CFO. Have they, do they not, with not having public experience in that, and I enjoy that and kind of be able to work with them. But I do think it's just never too soon to prepare, and I would hire up a little bit, hire somebody that get a mix of some public experience in there if you can, or people that have done bigger jobs, because the company should do nothing but get bigger if the plans go forward. And you want to make sure as there's more work that they can take on more and really go across different areas in that. So I just really think you can't get ready too soon, and you really need to hire up.
And I'll just add, you certainly need to think about, there's certain qualifications you just must have going public. And so on the audit committee, you need a chair of an audit committee who's signed a public filing before. And, at Beyond Meat, we had a great audit committee when we were private. We had someone who was a CFO of Stonyfield Farm Yogurt. And that she was very capable, but she was a private company. And so we went out and we got Kathy Waller, who was the CFO of Coca-Cola, and then Ned Siegel, who's the CFO of Twitter, which was a great blend and balance for what we needed in the finance audit committee, because, a real large CPG and then a large tech company. And so that would create a great balance. And I think the other thing is, and I think Christine kind of mentioned it, but, at least 18 months prior to the IPO, you can't have these people just fly in and all of a sudden, pretend to really be familiar with the company. And of course, audits, having a professional audit done well, and you don't want your first one or even second one, when you're a public company.
And any insights on company culture change of an IPO transition? I think that's sort of interesting. Have you seen the culture change in positive ways and negative ways? How to sort of manage a great culture through an IPO?
Well, the obvious one is information. So information by definition has to change. The information flow has to change somewhat when you go public. One of my favorite tricks when a company's going public is, everybody's used to getting all of this financial information, right? And you can't do that, right? And you have to restrict it more. And what I tell people is, so you can have all that information if you want to be on the blackout list. And it's amazing how many people will give up their access to information when they find out they can't trade their stock, right? So I think you have to find ways to turn that into a positive, though, right? There's going to be things you need to be sharing with the company. You need to have an openness, but you need to be smart too, right? You don't want to get in a situation where anybody starts doing things based on material non-public information, and we end up in bad places for everyone. So that whole thing is a very difficult thing to kind of control as you're going public, I would say. And it's an evolutionary thing. And I think you just need to be very aware of it and draw some lines and then really try to figure out ways in where you can be more open with the employees in different ways.
I remember after the IPO, we came back to California, and one of the folks who was at the IPO said, "Oh, well, you should have a monitor in the reception area when people walk in that shows the stock price." And I'm like, absolutely not. That would be the 1000% wrong thing to do, because there'll be days where the stock price goes up for nothing anyone in this building has done. And there'll be days when it goes down despite amazing things happening here. And so, it's important to think about what are the touchstones around culture and in a sense, really double down on those to the extent you can, so make sure people don't get caught up in all the distractions, which they really, for most of the company, the what's going on in the markets as a distraction from executing their jobs.
Yeah, and I find, some of the employees are, why is our stock down today? Why is it up? And I'm like, you just can't look at that every day. It's not your job. And I tried to have them not, focus on it as much, but obviously they do. So, but I do think the culture is really driven a lot from the CEO. And I think once the CEO goes from private to public, they have an extra job being a public company CEO, and they're now on a quarterly treadmill, and they have to answer, other than their investors, it's the general public and investors. So it's different. And then I also think they really have to double down on the culture to keep the people informed in that. So I think the CEO's job is huge. It's big to begin with and bigger. And so they really have to have, what does that executive staff look like, and who can they really rely on and help with that? And delegate. So I think that management team is really critical in that, to allow them to move forward in a positive way.